Uninvestable is a strong word. It is not one to be taken lightly. And if I'm saying that PayPal is uninvestable, a company I own in 2023, I need to give you good enough reasons for this. Okay, so what's the story behind PayPal? In 2022, then the CEO, Dan Sherman, said that they were going to have 750 million active users by end of 2025. We look at the numbers today. At the time, they had 429 million active users. How many do they have today? 439 million. So only 10 million increase. They are so far from that goal that they had. But of course, we know that this CEO is no longer in PayPal. Things changed. There was a new CEO, a new management, but now this CEO too is fired. But it goes deeper than that. It's not just about the number of active users. Maybe that Dan Sherman CEO was really too optimistic. But if we look at other numbers, number of transactions has flattened, the size of these transactions has flattened, the total payment volume is growing by only 6% annually, which many of you might say, okay, that's good. If they are buying back shares, it will be reflected per share, it will be more. But this is not what the market likes. The market likes companies that are growing. Last week, I wrote an article on Substack about value traps. How do you know that you're owning a value trap? And I posted this chart that over the long term, the one thing that the market is looking at is not really how much your margins have improved. It's not really how much more free cash flow you're generating. It's more about revenue growth. Over the short term, 1 year, maybe margins might be a good thing. So today, PayPal trading at 7 times earnings might look cheap. Maybe there's going to be a margin expansion and it's going to be trading at 15 times earnings, which is already doubling the price. Might be good, but over the long term, this is not what happens. So if you're holding PayPal thinking that long-term value will be created for you as a shareholder, I don't think it is going to happen. The total payment volume is at 6%. But what's worse, we look at Wise, dLocal, Adyen, all these companies are growing total payment volume at a rapid rate. But one thing that the market doesn't like is that the fact that the take rate is going down. This is the same thing about PayPal. The take rate of PayPal is going down. The reason why the total payment volume, the TPV of PayPal is going up is because they want to expand the Braintree, the unbranded business. But this brings the take rate lower. It means that for every dollar of transaction they are going to make in the future, the revenue on the income statement is going to be lower. They have to spend more and more money to acquire new customers and compel these customers to spend more money on PayPal, which they have been doing. They have been spending more money on marketing, on sales. That's why I say that I don't think Alex Reyes, the CEO, did a bad job. He brought the sales and marketing costs up, but brought down the other costs. Stock-based compensation went down. Other costs that they were spending money on went down. But the fact that they spent more money on sales and marketing without the actual revenue growth means that they have not been doing enough. And I'm not going to blame the CEO. It's a hard job. PayPal is a turnaround. It's a really hard job. But that's not a good enough reason to say that a stock is uninvestable. It all has to do with management, with the board of directors. You have to trust the people you're giving your money to. And I don't trust these people, and I don't think it's easy to trust them. Maybe you do. Maybe you found something that I don't. Maybe you know something. Please share in the comments. I want to know the story. Maybe you know something that I don't about PayPal and why you own the company. But looking at the management, the board of directors, I'm not confident at all in them. They have a new CEO. He comes from HP. Maybe he'll do a good job, but someone from HP, which is a hardware company, going into PayPal, trying to compete with all these fintech companies, I don't see that happening. dLocal is bringing new executives from Visa, from MasterCard. You know that this company wants to be a fintech company, wants to compete with Wise, with everything else. But this is not the case with PayPal. And what's worse is not really the management, it's the board of directors. You know that this honey scandal, I talked about it last year. There's a video from Megalag. He has 3 videos now about it. Please watch these videos. It's interesting. There is a scandal about honey. Everyone is talking about it except Wall Street. And Wall Street doesn't watch YouTube, so that's why they're not talking about it. I said that in my last video about PayPal, that there was going to be probably a write-off. an impairment of asset because they bought Honey for $4 billion, which I don't think it is worth today. The market cap of PayPal, I think, it are 35 billion. So I don't think Honey is 10% of PayPal. But unfortunately, I was wrong about that because according to the accounting, you can only impair assets if it is a reportable unit, something like that. So Honey is not a separate reportable unit. I don't think they are going to have any asset impairment, but they have to address the issue. There are so many lawsuits on this part of PayPal, which they bought for 4 billion, which is not worth 4 billion today. They have to address it. They are not doing that. You may say that Honey is something small, we should not worry, but it is the same board of directors that approved the acquisition of Honey in 2019, in 2020. They are the same people today. 7 out of the 11 directors of PayPal today were there when the Honey acquisition took place. Maybe they knew that there was something wrong. They knew about the fraud. They hid it, which is bad. Or maybe they did not know. Then they did not do the due diligence, which they should do. This is their job. So to expect that things change for PayPal, the story of PayPal to change, we need better management. We need a better board. This is not going to happen. We need activist investors to come and change things. There was Paul Singer who came, but he left. So that's why I say PayPal is uninvestable. It's not really about the companies, the numbers themselves. The numbers are not great, but they are not bad. They are not that bad. Things can improve. It's more qualitative. And unless the story of the company improves, the numbers are here only to back the story, to confirm the story. And unless the story of PayPal improves, I don't think anyone should be investing in this company. But as I said, I might be wrong. I am biased. I own PayPal. I took a profit in 2024, small profit. I invested in Wise. I prefer Wise as another fintech I like is dLocal. I would recommend you watch this video about dLocal next. Have a nice day and goodbye.